In today's video, we're going to be focusing on Bitcoin's price action through the lens and context of the Pi Cycle Top Indicator. The Pi Cycle Top Indicator has been a valuable and reliable source of bull market top confirmation in the past, and it's very likely that we'll see that reliable confirmation of a bull market top in the future as well. So let's dissect this in a lot more detail. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So here's the Pi Cycle Top Indicator. We can see a wide variety of different very interesting things in price action. So let's first focus on a bear market year. In a bear market year, we tend to see price action just drop below the orange Pi cycle moving average, but then in the pre-halving year we see price meander around the orange moving average, and then in the halving year 2016 in this regard is where we simply maintain above the orange moving average. And this is a scenario or tendency that also continues into the bear market that follows. So 2018, just losing this orange moving average. In the pre-halving year, we see price generally maintain itself above this orange moving average and then lose it once again. But in the halving year, once we've managed to reclaim the orange moving average as a support, that's when we simply just rally towards the upside. There are deviations below it, above it, but generally in a halving year we tend to see this orange moving average hold quite nicely. And so if we're thinking about this halving year, then holding this moving average is quite important, and we've seen small deviations. And if we actually move in, or we don't see that actually zooming in, but if we zoom in here, for example, so I think this is a better way to illustrate things. Deviation below the orange moving average has historically been a bargain buying opportunity, and that has been the case throughout this cycle really. So even dating to 2023, so a pre-halving year, when we got that bear market bottom, generally holding above the orange moving average has been that support that enables the uptrend. Any deviations below here is a bargain buying opportunity. In the halving year of 2024, we've seen that we don't see deviations very much. And in fact, in halving years in the past, we wouldn't really see deviations at all. That goes for 2020, but also even 2017, you can see that small deviations are absolute bargain buying opportunities. This deviation even here as well, these little dots here are also deviations. So in halving years we don't really see many deviations below the orange moving average, which is why this current deviation is so important and special, because we're currently seeing this deviation for the first time in 2024. For the first time in this halving year, for the first time since really a long time, we haven't seen a deviation below the orange moving average since really just late 2023. So this deviation is a bargain buying opportunity because, historically speaking, any deviation within a halving year has been a bargain buying opportunity. In 2020, we saw that pandemic triggered crash, so that's a black swan activity. But throughout 2017, any deviation below the orange moving average has been a fantastic buy side opportunity. And currently, this orange moving average represented by the price of 66k, so now we're currently around 61k. So definitely deviation right now occurring, and this is something that in the future is probably going to benefit investors quite nicely. This is probably going to be the moment of absolute extreme fear and panic and capitulation on the sell side. So this will probably turn into a fantastic bargain buying opportunity in the future. And history attests to this quite nicely. In a halving year, we've never really seen prolonged periods of downside volatility below the orange moving average, so this is a fantastic opportunity that shouldn't be ignored or missed. And on the upside of that, we tend to see revisits of the green moving average, And when we do see these revisits, we tend to reject on the first time of asking. And this is actually something we've been talking about quite a lot in the past, that on the first time of asking, we tend to see rejections from this green moving average. 2017 is showcasing that many times over, even in 2013 also, just rejection from the green moving average. But on the second time or third time of asking, we break beyond this green moving average. So same thing even here. And of course also here. So the fact that we've rejected from the green moving average, that doesn't come as a surprise, but in the future we're probably going to be able to break the green moving average, and the green moving average represents the price action of 92k in fact. So history is suggesting that we're probably going to, once we revisit 91k, we're going to be able to overextend beyond it. We won't likely reject from there because we've already seen a rejection from the green moving average, which tends to happen on the initial attempt. So the fact that we'll probably see another revisit of the green moving average in the future at around 92k, and in fact down the line this might even be 100k in the future, because this green moving average continues to climb upwards. We're probably going to be able to overextend beyond there, like we've seen many times in the past. So these historical tendencies that we tend to see from prior to current price action, those are tendencies that we can extrapolate and really pay attention to in predicting future price moves. So the fact that we're below this orange moving average, that's an alarm signal that this is really probably going to be a bargain buying opportunity for bargain buyers, and in the future we're going to probably see fantastic ROI on that once we revisit the green moving average, and once we inevitably also overextend and break beyond it. So probably those are the main points in this video, but the last thing I really wanted to cover is the pi cycle crossover itself. And if we just look here, the fact that we're deviating below the orange moving average, probably the next chart will showcase in a lot more detail. We've been seeing over the past months that this is an inclining moving average, but here we're actually curling down and kind of flatlining when it comes to this moving average. So if we were to extrapolate this green moving average into the future, and then this orange moving average into the future, then you can actually see that there is no crossover in sight. And when a bearish crossover actually occurs, that's the bull market peak incoming, essentially. And so that crossover in the future is still a ways away. And when we're talking about the rate of acceleration in this cycle, well, in mid-March we were accelerating in this cycle by 260 days. The fact that we are and have been within this sideways range for over 2 months now, that's reduced the rate of acceleration in this cycle from 260 days, which we established in mid-March, to now actually 160 days, maybe even 155 days. So the fact that we're seeing sideways reaccumulation here is beneficial for the cycle. In fact, we should probably see a few more months of this consolidation going forward, which will be even more beneficial in resynchronizing this current cycle to traditional halving cycles. And it's not necessarily about the downside. Of course, the downside within this range is necessary in slowing down the cycle, but more than anything else, it's really about just sideways movement. And within this range, we're going to be seeing movements towards the range high at 71.5k and all the way to 6600, and some deviation even below then. So really all about that zigzagging sinusoidal price action within this reaccumulation range, and downside inside the range is a part of that, and upside within that range is also a part of that. But neither downside or upside movement are bullish or bearish, because this is non-trending price action. We're not in a trend. We're just moving sideways in preparation for the next trend to emerge, and that next trend is probably going to be upside. So in this consolidatory non-trending price action, we're going to emerge into a parabolic upside movement in the future, but these downside movements aren't bearish. Upside movements by the same token aren't also bullish, because we're just zigzagging here, preparing for that next major move, which is going to be ultimately bullish in the future. So when it comes to these this crossover, we're really far away. There's no talk of a bull market top as per this indicator, and this indicator has been quite a reliable one in the future. We've seen fantastic crossovers predict bull market tops quite accurately in the past, and so the fact that we're nowhere close to a bull market top according to the pi cycle crossover indicator here just showcases that we still have a ways to go. We still have a lot of time left in the cycle, and the fact is, the longer we consolidate here, the longer the bull market will be, because we're essentially resynchronizing with traditional halving cycles by going sideways right now, and the more we continue to move sideways, the better it will be for this traditional halving resynchronization cycle. So it's currently down from 260 days of rate of acceleration to 155 days, but we still need at least 4 months more of this sort of consolidation going forward to resynchronize with traditional halving cycles. So even though we've seen a lot of reaccumulation and consolidation thus far, we still need a similar period of where price simply continues to go sideways in the future. So a September breakout beyond 71.5k is what history suggests will occur, and that's something I'm sticking towards. I think we're going to resynchronize with traditional halving cycles. I think we're going to continue moving sideways here, and I think we're going to break out beyond 71.5k in September or so, October, whatever the case may be, and break out into a parabolic phase of the cycle where we'll be seeing fantastic exponential parabolic price moves for the whole market, and then that gets us into a bull market top in 2025 at some point in mid or late 2025. So that's about it for today's video. Thank you so much for watching today. I'm Rekt Capital, and I'll speak to you in the next one. Of course, subscribe and like this channel. Like this video if you enjoyed it. Subscribe to the channel if you enjoyed this video. Thank you so much, and I'll speak to you in the next one. Speak to you soon.